Bitcoin is preparing to make an explosive move within the next 80 days. In today's video, we're going to be discussing exactly why the next 80 days are important and what you should expect. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you so much for tuning in. I hope you're all having a magnificent day today. In today's video, we're going to be discussing in explicit detail exactly why the next 80 days of price action holds absolute significance in determining the macro trajectory for Bitcoin for the remainder of 2023 and how this could potentially impact the macro trends. We're also going to be talking about the short-term price action, upcoming news events, and so much more. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and relevant news events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin, and with the relevant economic updates. If you're interested in joining our VIP channel, we post exact trading signals with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to 5 group chats: our general chat, our trading chat and education chat, our trade setup chat, our news chat, our help chat, and our daily video chat. If you're interested in joining the main VIP channel and 5 group chats, contact me via the pinned comment in the free channel to find out more information and find our entire trading track record since February 2021. Let's go ahead guys and jump into the video because we do have quite a fair bit to talk about today. Starting on the market data, as of right now, the 24-hour volume is sitting at 39 billion. This is up 65% over the last 24-hour period. Looking at 24-hour liquidations, we're up 168% at 52 million over the last 24-hour period. Looking at our monthly returns for Bitcoin, August is currently now sitting at 0%. We're about 14 days into the month, a little bit under halfway through. Moving to those liquidations, of the 52 million in liquidations, a vast majority came from those long positions. If we break it down even further to the last couple hours, we can see the majority of those liquidations, around 10 million in those long liquidations, actually came within the recent move of Bitcoin on that correction down to retest the midline of that channel. If you've been watching the channel, been following our videos, you would know that was our target. In fact, we had a short active for that trade. We were looking for a full-blown rejection ever since that retest of that high point. You can see over here, targeting down to that dotted trend line, perfectly played out. Again, guys, if you've been following the channel, you would have caught that, so congratulations. Moving on from there, looking at the volatility index is still very, very low. We can see a 30-day period is sitting sub 1.6. This is the lowest we have seen since 2020. We're looking at July 2020, the lowest we have seen since the COVID-19 correction. Looking at the 60-day period, we are seeing the volatility reach lows that we have not seen since 2016, guys. I've been saying this every single day. The lowering volatility, the dropping volume, this is signifying we are going to see a large macro directional shift in price action soon. And I believe that this large macro directional shift is going to occur within this 80-day window. I'm going to discuss exactly in today's video why I believe that to be the case. But before we do, let's go ahead and discuss the broader markets. The Dow Jones, the S&P 500, the DXY. The DXY has currently broken out of its high time frame downtrend. This is not a good sign for cryptocurrency. This is not a good sign for the stock market. This is bearish. If the DXY continues upwards, we are looking for a move to 105 to 104.5 into this level of resistance. As we know, the DXY rising is not a good sign for asset prices, as it reflects in the economy the cost of debt is rising. Okay, this puts assets in a less favorable risk position companies, individuals are more likely to be selling off their assets, okay, avoiding taking on short-term debts to acquire income-producing assets, and this can potentially push asset prices down. I'm not going to get into that too much today, but we've done a lot of content in regards to how interest rates, how inflation impact asset prices, but looking at this right over here, this is not a very good sign for the future of asset prices, provided provided the DXY continues toward that upside. If we do see the DXY reject and break back below here and continue down, this will be considered bullish. So right now we are pushing into this bearish territory, and that should be something we are watching over the next few weeks, because it can formulate the overall expected trajectory of these assets over the next few weeks, and it can create some sort of narrative that we can kind of trade into. Looking at the S&P 500, we can see the S&P 500 has lost the 4,500 major level of support. If you've been watching our channel, we've been telling you the risk return over here is more in favor of shorts. We're looking for a move toward the downside. The first target being 4,500, and the next target being this horizontal support level at 4,300. If we continue to lose these levels, if we continue past the 50 EMA, we are looking for a correction all the way down to 4,300. As you know, this is a high time frame rising channel. A rising channel formation is a bearish exhaustion structure. If you flip the channel and invert the chart, you can see we are in a descending channel formation. If we were in a descending channel formation, if this is what the chart orientation was, would your perception of reality change? Would you then expect the price to continue upwards, or would you then expect the price to continue downwards? Change the chart, flip the orientation, and see if your biases change. If your biases change when the visual representation, the orientation of the chart change, it means you are making your decisions primarily on emotion and not what the charts are actually telling you. Right now, we are in a rising channel. There is a degree of uncertainty, and there is definitely some bearish pressure that could push the prices further down. I'd be definitely watching out for this. If we do lose this uptrending support line, that could be catastrophic and could result in a full-blown correction on the macro charts of the S&P 500. Definitely watch out for that. To invalidate this, we need to start breaking above these local high points and pushing up higher. Until then, we are looking more bearish than we are bullish on the S&P, particularly with the DXY continuing upwards. And the same goes for Bitcoin. We're discussing that in today's video. So let's go ahead and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Starting on why the next 80 days hold absolute significance. If we're looking at the current price range, we have 2 key levels we're really focusing on for Bitcoin for the macro charts. The first key level being this high time frame uptrending diagonal support. And you can see that represented by that black diagonal trend line. I'll go ahead and mark it out in a second, represented by this black diagonal trend line. This black diagonal trend line represents the macro, or should I say weekly, macro, whatever you want to call it, monthly uptrend Bitcoin has been in ever since early January, early 2023. We established this uptrend, we confirmed the uptrend, and we have now been within this uptrend now for coming on to about 10 months. So 9 months. It's a pretty long uptrend. It's actually a pretty significant uptrend. This diagonal trend line represents the overall trajectory of the trend, but it also represents a trigger point in which the trend will be retested / lost if we break underneath this trajectory, underneath this trend line. Number 2 is going to be the horizontal high time frame resistance sitting at 32,000. We know this level is an area of significance, as if we look at the VRPV, we can see immediately above 32,000, we have a massive drop off in our historical resistance. And this is expected as this area is an area of high volatility, an area of low resistance. If we push into this range from the bottom side up with positive momentum, we're very likely to continue upwards into this next chunk of resistance at around 38 to 40,000. And therefore, we can actually describe that 32K level resistance, on the chart as a bullish macro trigger. So right now we are stuck between a bullish macro trigger at 32,000 and our uptrending support level. If we look at these two levels from a point of a date range trend, we can see they converge eventually. And they are very much expected to converge because, again, one is a horizontal, one is a diagonal uptrending support line. This is expected to converge around late October, around the end of October. That gives us from today around about 80 days, 77 days until these trend lines converge, meaning we are expected to see either one of two things: a significant breakdown from this uptrending level between now and October 29, or a break above the macro bullish trigger that will result in a high time frame continuation upwards within the next 80 days. And this is why the next 80 days from a structural perspective is so significant. Now, if we apply this fact on top, within the next 80 days, we are also expecting the ETF decision from the SEC to be either approved or denied. And this could act as a catalyst for either a macro continuation upwards or that high time frame rejection and macro correction toward the downside. And believe it when I say it, guys, this is very important, because if we do lose this uptrending support level, we are very much entering a macro correction. We'll discuss in detail in just a moment why that is the case. But let's talk about, from a technical perspective, what we can see on the chart, what we can look for on the chart to indicate which outcome is going to occur from a technical perspective. So what we are looking for is momentum. We're going to be looking for momentum shifts, primarily for a break toward the downside. We are looking for a negative momentum shift. For a break toward the top side, we are looking for a positive momentum shift. If we're taking a look at the RSI over here, we can draw our trend lines in. We take these local low points as resistances over here to represent our local lows, and we take our divergence points on the top level to represent our downtrending resistance over the course of this entire structure of price action. The reason we're not taking this point over here is because we had our divergence. We're taking that initial point at the start, because this represents the range, the visible range of the trend in which we have been within, right? This is our entire trend. The price has been above this trend the entire time. Therefore, we're kind of going ahead and putting this entire block of data within that momentum range over here. So if we are looking for a positive shift in momentum, greater than what we have seen in this entire range, which will facilitate a continuation upwards, we need to see the RSI break toward the upside. If the RSI breaks towards the upside, that represents a positive momentum shift, a momentum shift greater than any momentum shift we have seen within this range prior, which could facilitate a continuation through this upper resistance. As you know, momentum is generally and is very simply a representation of the change in strength between buyers and sellers. So we see a significant momentum shift. We see a significant shift in strength between buyers and sellers, and that could push the prices upwards. Alternatively, on the downside, if we see a negative momentum shift downwards, that could represent a shift in strength towards the sellers and could push the prices under this high time frame support level. So if we're looking for, from a technical perspective, a break up or a breakdown, we are looking for a momentum shift on this daily chart. A momentum shift downwards will increase the probabilities of a breakdown. A momentum shift upwards would increase the probabilities of a break upwards towards those next targets. We also have to factor in the fact that the ETF decision could act as a potential trigger for these moves. And therefore, if we're looking at macro directional price action, we have to understand that technical indicators don't move price. Buyers and sellers move price. Buyers and sellers make decisions based on economic conditions, based on news events, based on economic policy, based on governmental regulations, all this kind of stuff. It all comes into effect in making decisions on a macro scale that push the prices in particular directions. So the ETF decision, the ETF news will have a very significant and profound impact on the directional price action for the charts, which will then be reflected in the technical indicators. So we're looking for two things. Number one, if we see a momentum shift negative prior to the news events, we have to take it at face value and expect it to be a breakdown. If we see no shift in momentum while the news event then comes out, we are then looking at the reaction to the news event and taking that at face value, depending on what the indicators say, to then determine where the price will go. I'll give you an example. If the price continues sideways and then the ETF gets rejected and the price breaks down, and due to the price breaking down, the momentum breaks down, we have to take that at face value and assume we have had a negative momentum shift and the price will continue toward the downside, vice versa for the break toward the upside. So another question is, and another statement is, why would this break down, or why would this break up be so significant in determining the next 4 months of price action for the rest of 2023? So to answer that, we need to go to the macro charts. And to understand why a breakdown could be catastrophic for Bitcoin on a macro scale, we need to understand this chart over here. This chart over here is going to be our weekly chart. It represents the Gaussian channel, and more importantly, it represents the price is above the Gaussian channel and the Gaussian channel has turned green. What does this really mean? It means on the macro scale, we have seen the price move up to a large enough extent to the point at which we have seen a high time frame shift in strength from weak bullish to strong bullish. Okay, so shift in strength. It's not a change in strength. The change will be from bearish to bullish. A change in strength occurs over here. We go from bearish to bullish. This is from weak bullish to strong bullish. It's a macro change. It's a macro shift in the strength of the price action. If Bitcoin fails to hold above the upper band of the Gaussian channel, we will not only be shifting into a bearish trend, remember, because when we break from the top side down, we shift from bullish to bearish. We'll not only be breaking into a bearish weekly trend from a technical perspective, but if we look at the daily chart, where that 28.4K level actually lines up with, it lines up with that diagonal trend line. In fact, the 28.4K level converges under the diagonal trend line from the 23rd of August onwards. Therefore, if we retest 28.4K, it has to be done before the 23rd of August. If we retest 28.4K prior to the 23rd of August, we are now retesting it from a point of weakness instead of a point of strength, and that could push the prices downwards. A loss of the Gaussian channel on the weekly chart will result in something we have never seen before according to the macro charts. If we take a look at the 4-year cycle, specifically focusing on the particular points where the macro price action has broken above the prior macro resistance levels. I'm going to show you on the chart over here. Specifically the points on which the price is broken above the prior macro resistances, that being the horizontal red lines on the chart. So let's take a look. If we take a look at the price action over here, we had our bear market, we had our reversal, we had our bull market. Perfect. If we take a look, we had a 1-year long support level. We lost that support level. We capitulate to an absolute bottom. We break back above it on the monthly chart. We continue upwards. Same thing happens. 1-year long support level, capitulate to the bottom, break back above it, continue on a macro chart. 1-year long support level, break below it, head to the bottom, continue upwards, break above it, continue on a macro scale. If we take a look at the Gaussian channel by no coincidence happens to turn green, and the price happens to break above the Gaussian channel. At the same moment, the price action breaks above that 1-year long resistance on the monthly scale. We can see that instance happen over here in 2016, and we can see that instance actually happen again over here in 2019. So in this instance, if we break above the Gaussian channel and then fail to continue upwards, but continue back below the Gaussian channel, we will be seeing something on the macro chart we have not yet seen before, which is going to be, number one, a break above the weekly Gaussian channel, but a failure to hold above and continue upwards, which will result in a macro correction. This has the potential to change the course of direction of price action on the monthly scale in a different way from what we have seen in the past. In the past, every single time we have seen consolidation, new low, retest the 1 year support, break above, continuation upwards. We have seen that twice. We saw it here, we saw it over here. The third time we are currently testing now. We have broken down below, we created a new low, we came up, we retested that 1 year support, we're broken above the Gaussian channel. According to the 4 year cycle, we should not retest and not break below 28.4k. Instead, we should continue upwards to retest our dotted trend line before we then correct again. So if we continue downwards below 28.4k and subsequently break underneath this high time frame uptrending trend line, this will be a scenario that we have not seen before on the macro charts, and could potentially send Bitcoin into a macro downtrend. So where could Bitcoin go next? If we break below this trend line, we are looking for a move to 25.2 to 24.4. And I truly believe if we retest that level, we actually could be going lower to around 21.8, potentially even to 20,000. Again, this is not bearish right now. This is not bullish right now. We're in this high time frame upward compression coming into an apex, and we have a lot going on the chart so I can determine where the price will go next. There's no point being overly bearish right now, just as there is no point being overly bullish right now. Right now is a time to be patient. It's a time to be aware of what's happening. It's a time to plan and prepare and execute when it occurs. And you're probably thinking, Whale, you're telling me not to be bullish. What do you mean? We've been in an uptrend for 8 months. Yes, we bought this uptrend. We bought at 16.5k. We bought at 18k. We sold at 30,000. We rebought. We look for new longs, and we closed off our longs over here. We've been more hedged short ever since. You can trade the waves, but on a macro perspective, on a monthly perspective, we have not quite broken over that monthly bullish trigger yet to say with certainty the 4 year cycle will be followed, to say with certainty the price is going to continue upwards on a macro scale. We do have a little bit more to go before we can say that with certainty. Moving on to the short term. Bitcoin, as you know, has rejected from that 29.8k level once more. If we zoom out, we can see that 29.8k level was that base of support for the entirety of price action between, we're looking at the mid-June to the end of July. We consolidated for quite some time over here. We rejected, we continued down, we rejected once, we rejected twice, we rejected 3 times, and we continued down to retest this mid-level on the channel once more. As of right now, if we're looking at the biases, the trend is daily bearish underneath 29.8 to 30,000. We are daily bearish under 29.8 to 30,000. We are weekly bearish underneath 28.4. We've already talked about that. We are daily bullish, okay, above 30,400 to 30,200. Daily bullish. Okay, I'll write that in. Daily bullish. And we are monthly bullish above 32,000. Monthly bullish. Whilst we remain above 28.4, we are weekly bullish until we reach 32. Okay, so to go over one more time. While we remain above 28.4, we are in a weekly bullish trend. A weekly bullish trend, of course, is represented by that diagonal uptrend we've been talking about for the rest of the video. We are daily bearish underneath 29.8. We are daily bullish above 30,400, and we are monthly bullish from 32,000 onwards. If we take a look at the justification for that, if we see the VRPV, which is that yellow and blue scale on the horizontal scale on the right, we can see immediately after 30,200 to 30,400, we decrease in the VRPV. This represents decreasing historical resistance on the move up. If we break through this level of resistance, we have positive momentum, positive volatility, positive buying pressure that could push the price upwards more aggressively. And of course, we have decreasing resistance as the price moves upwards, and therefore we are much more likely to continue upwards. While we remain above 29.8 to 30, we have the opposite, right? We have increasing resistance toward the downside. When does that resistance start to dry up? If we take a look at this level over here, and then if it's lower range, we start to dry up in resistance, and therefore if we lose this lower level over here, we can expect a rapid correction to 28.4. So going back to that point, how can Bitcoin retest 28.4K? If we see a loss of this lower part of the channel at 28.8, we are expecting a rapid and volatile move towards 28.4. And we do hope that we retest 28.4 prior to the 23rd of August, as if we retested after the 23rd of August, we will have retested it having lost this high time frame uptrend. In today's video, guys, we have covered everything you need to understand why the next 80 days are so important. We didn't get enough time to finish a short term. I'm going to discuss the short term more in tomorrow's video. I hope you enjoyed today's video. I do have a little bit of a cold, so excuse me for stopping and pausing every 5 seconds, but I hope you enjoyed it. I'll catch you guys in the next one. Thanks for watching. Cheers.